Welcome back to CryptosRUs. I am George, or all George. So good morning. Never miss that. Big day today. Very big day. Right now, what we're seeing is markets are coming up. Bitcoin is coming up. We received some pretty good economic data today. So I'm going to talk about that, talk about what's going on with Bitcoin and crypto, and then, of course, lead into this huge Jackson Hole press conference with Fed Chair Jerome Powell. All eyes will be on that conference to see what he says about inflation, about what the Fed may be doing for the remainder of this year. So let's do this. Smash it a like, subscribe to the channel. Make sure you hit that notification bell to get notified of all my streams. Follow me on social media. Check out CryptosRUs.com. And make sure you follow all of my channels out there. Good morning, guys. Welcome, welcome, welcome. You know, today is going to be exciting. Right now, things are looking good. Pretty good. Let's refresh this page. Futures up. Well, it was up. Now it's even. Now it's even, but it's okay because Bitcoin at least is up. Bitcoin shot up to 21.7. So there was definitely a reaction after this one big economic data. As for the U.S. market, well, it's hanging in there, basically dead even, waiting for this speech that should be coming up in about half hour, right? So in the meantime, let's talk about what has happened so far this morning. Well, PCI data came out, or not PCI, PCE data, which is another measurement of inflation. I'm surprised there's not more like news articles about it. I had to kind of dig for it, but what's good is it came in lower than expected. So the July PCE price index went down by 0.1%. So a lot of people were thinking that PCE, well, at least Fed Powell thinks that PCE is a better measurement of inflation than CPI. And many people thought that PCE would show that inflation is still going up. But no, it went down a little bit, not as much as the CPI number last month, right? So, but it did go down. Overall, inflation is still at 6.3%, right? But it came down 0.1%. Now, the core inflation went up 0.1%. Personal spending went up 0.1%, and income went up 0.2%. So both personal income and personal spending came in less than expected. But overall, it's important to note that it's still better than the consensus, which means overall it's good in a way, right? Why is it good? Well, because inflation is just not going up as much as people thought. So that's good, right? So we'll have to see what what comes out of Jackson Hole today, what Jerome Powell says about how he feels about inflation, how he's interpreting these numbers, especially now that PCE numbers out. So for sure, he's going to be talking about this, and we'll see what he says. All right. So as for, I forgot what this one point I was going to make, but as for personal income and personal spending, actually those numbers coming down is good, because what Jerome Powell doesn't want to see is that the economy, because he's trying to slow down demand, right? And if the demand is still skyrocketing, that means it's not going to help inflation. So overall, this reporting is about as good as it can be, meaning demand has come down, like personal spending has come down, even though it's not in reversal, it has come down, and inflation has come down, right? So if you put the two together, it's actually the best case scenario, really, in terms of numbers. All right, so lead off with that. What else is there? UK, not looking good. UK energy bills to rise by 80% in October as regulator announces hike. So in UK, there's like set limits on how much energy could go up by, right? And that limit keeps growing and growing and growing. So 80% in October. That's crazy. $3,500. or 3,500 pounds. Sorry, I'm used to saying dollars. From 1,900 pounds, 2,000 pounds to 3,500 pounds per year. That's a huge increase right there, right? So obviously UK is having a little worse than the US as far as energy goes, and this is of course affected by the war that's ongoing and inflation and everything else, right? So not looking good. If you're in the UK, be prepared to spend a lot more pounds on energy. I saw this and I couldn't believe it. You know, on Twitter, you have a lot of people tweeting stuff out, right? Attacking the other side. But this time, I couldn't believe it. This is actually straight from the White House. The White House is trying to show the hypocrisy of some of the Congress people out there. So yesterday I covered how President Biden decided to forgive a lot of student loans, right? Up to $10,000 and $20,000 for people who have Pell Grants. So it's shocking, right? Because afterwards, well, no, that's not the shocking part. The shocking part is the White House started tweeting out and started calling out all these Congress people because these people are the ones that are the most against the student loan forgiveness. They called out Biden. They called out administration. They called out the Democrats, basically, saying, oh, this is stupid, right? You can't just forgive all this money. And they're going on air and doing all these things, but probably for the wrong reasons. But then the White House started tweeting out all these people that had their PPP loans forgiven. Like Marjorie Taylor Greene had $183,000 in PPP loans forgiven. There's another one, Congressman Vern Buchanan had $2.3 million in PPP loans forgiven. And then here's another one, $1.4 million. Here's another one, $1 million. Here's another one, $1 million. Here's another one, $500,000 basically. So so this whole thing is weird. You know, before you didn't see stuff like this, right? Now you got the White House, the official White House Twitter calling out Congress people. I don't think I've ever seen that before, right? But, you know, like I said, they're trying to show the hypocrisy of some of these people that's calling out, saying you can't forgive student loans, yet they had their PPP loans forgiven, right? So it's definitely a battle right now. There's definitely a battle going on. So I just want to point that out right now. All right. What else is there? As for the rate hikes, a lot of people still think that, you know, inflation is still an issue. We need the Fed to hike rates by a lot more, right? And according to this person, at least another 100 basis points. And Fed Bullard also recently came out and said he still believes that the Fed needs to front load more rate hikes. So he's calling for another 125, 150 basis point hike, but he wants to see it like right away rather than a little bit at a time. So a lot of people still think that we need to raise rates, a lot more rates in order to curb inflation. So let's see what Powell says. Is he in agreement? Is he going to say, okay, we're going to stick with 75 basis points in September and another 75 in November and then another 75 in December, right, to get it up to over 3%? We'll see in a little bit, 20 minutes. We got 20 minutes to go before the press conference. All right, and then as for some crypto stuff, what's going on? Zhu Hits Back at ITrustCapital liquidators from Bangkok. Supposedly, he's saying that these creditors, right, they tricked the high courts of Singapore because recently it was declared that those creditors can take assets or seize assets from ITrustCapital and basically take it because they claim that they lost basically everything, right, and they want to recover what they can. So supposedly Zhu is saying that, you know, these creditors or liquidators are misleading and inaccurate and crying a river and blah, 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 blah. I mean, honestly, for a guy that, that was trying to liquidate his $50 million house quickly so that he could escape the country, I don't know if he should be like, crying a river about liquidators trying to take back some of what he basically stole, right? So I have no remorse about anything that's going on with him right now. But anyways, just thought I'd throw that out there. Tornado Cash developer allegedly had links to Russia's FSB. I don't know if this is like a smear campaign to make Tornado Cash look bad now, but supposedly the one guy that they arrested supposedly has links to Russia's FSB and what is the FSB? Russia's Federal Security Service, and there's all this bad stuff that's coming out about Tornado Cash right now. So again, I don't know if this is all after the fact, so I don't know if this is all a smear campaign to just kind of discredit this whole project. GitHub has already removed all access to the code. They removed the code itself and everything that relates to this. So yeah, there's that. Former SEC Chair Jay Clayton. I remember when Jay Clayton was in charge, and everyone hated him for it because he would not allow Bitcoin ETF to go through, right? Now, in hindsight, versus what Gary Gensler is doing these days, Jay Clayton was a puppy dog, basically. Like, the only thing bad we could say about Jay Clayton with crypto was, yeah, he didn't approve a Bitcoin ETF when we wanted it to. But outside of that, he was not suing projects left and right, not trying to control the whole market. And I don't know if you guys saw, Forbes came out with a hit piece on Gary Gensler calling for his resignation. This is from Forbes. I don't know if you guys saw that. But it's interesting how many people hate Gary Gensler when at first everyone thought Gary Gensler was going to be good being SEC chair because, he was teaching classes at MIT about blockchain. So everyone thought he's pro blockchain and he's pro, he's very knowledgeable. He's going to be good for the industry. But look at what's actually happening right now, right? But anyways, previous Commissioner Jay Clayton says that, we need to embrace the efficiencies that's provided by tokenization, with payments and custody of assets in digital forms and stuff like that, right? Also, we should move forward on stablecoin rules, identifying characteristics that make stablecoins a means of payment and not a security commodity. These are things I agree with, right? These are stuff that needs to be done. So now I kind of miss Jay Clayton, and I don't think anyone is happy with what Gary's doing these days. All right, what else is there? Here's a good chart of Bitcoin, right? The moving average of 10-day versus the 100. And you're looking at, there's certain times the crossover happens, right? We're in one of those times. And then when it crosses back, that's when good things happen, right? So we're still waiting for that to happen. But first things first, we need to see Bitcoin break to 29,000 again. Then things will get interesting because that's pretty much 29,000 is kind of like our baseline. That's where we need to get back to, and we need to cross that in order to see some goodness happen. So still waiting for that to happen right now. Got about 15 minutes before this big Jackson Hole press conference, right? Let's see what he says. Well, let's do some Q&A beforehand. U.S. market is still flat right now. Bitcoin is still doing good. Entire crypto market cap, when this refreshes, should be up a little bit. Let's see. Refresh. There we go. Did it refresh? Kind of. Hey, XRP is doing good today. Somewhat good. Better. Cardano, the Vasil fork is getting very, very close. So look forward to that. I covered that last night. Very, very close. So that could be even this weekend. Matic coming up a little bit. Any big movers today? Aave. Huobi, for whatever reason, synthetic. Theta. Theta's up. Theta's up. It could be because Samsung, I just covered Samsung yesterday. They're about to enter crypto space in a big way. And Theta is partnered up with Samsung already for their new Galaxy NFTs. All right, let's do some Q&A. The press conference is about to start in 14 minutes, guys. So we got to hang in there for 14 minutes, and then we will catch it live. I'm scrolling up, and I'm reading through some of the comments. Let's see here. Someone says you get free tuition in parts of the UK. Well, that's pretty good. Didn't know that. FSB is the XKGB. That's kind of what I figured. You know, it doesn't sound good at all. Let's see. Still scrolling. Little short squeeze going on. Yeah, quite possibly. We had a couple big things happen this morning already. Obviously, we had the PCE number that came in better than expected, so brought things up. Also, we had a big options expiration, which almost like a nothing burger, I believe. Or maybe it wasn't, because it did drop Bitcoin down to almost below 21,000. It went down as low as 21.1, so it could have been to drive things. The whales could have tried to drive Bitcoins down, price down as much as possible for the expirations, but afterwards it kind of bounced back up. So we had those two things happen already. And then the third big thing, obviously the biggest one of all, is what's coming in about 15 or 12 minutes. Is Trust Wallet safe? It is. So far. I've been using it for quite some time, and it's good. We're going to 25K after Jackson. I like to see that happen. Got 12 minutes, guys. 12 minutes. Prepare to DCA or not, Black Tornado, you should have been doing it already. You're not supposed to wait for confirmation. Even though if you do wait for confirmation and it starts going up, we're still such at a low level, would not be a bad idea to be DCAing. Pedro, you already mentioned that. Stop talking about the same Lakers news. Is he bringing Gina? I don't know. I don't think so. I don't think this is a press conference with press there. Not the usual press, at least. Man, I'm going to say this once, and I'm not going to say it again. All right, Trey and everyone else that's asking about Luna Classic and their 1.2% burn, okay? There's way too many shillers right now trying to pump that, trying to make you think that it's going to go somewhere. No, it's not going to go anywhere. Do you really think a 1.2% burn does anything? It went from 100 billion to 6 trillion in circulation. You think that 1.2% burn is going to do anything? There's way too many people that's way too excited about that burn and trying to cause some excitement, but it's a dead chain. nothing is happening on top of it, and a 1.2% burn is not going to do anything to the project. It's a dead project. All the dApp makers left. And of course, Do Kwon left. And of course, the Terra team left. So you're dead with a dead chain. So way too many people are trying to jump on a bandwagon because they see like a 20% jump in a day and they're like, oh yeah, we're all go FOMO in. And then watch it drop and then go back to previous levels and then you go hate yourself again. So stop asking about it and stop trying to get in on the FOMO because it's not going to end well. Just like people that hopped on the Celsius train. After they declared bankruptcy, all these people are like, George, look, there's a short squeeze going on with Cell. Let's all get into it, right? What happened to those people? They stopped asking about it because Cell tokens start dropping and dumping again on their heads, and they have no one to blame but themselves. Why would you buy a token of a project that is in bankruptcy right now? Think about it. Just like people asking me about Voyager. Why is Voyager going up? Should I stock up on Voyager tokens? You think you should stock on Voyager tokens when Voyager is in bankruptcy and about to sell themselves to FTX or Binance for pennies on the dollar? Do you really think that's a good idea? Think about it, right? You have some whales that's manipulated the market, taking advantage of people that want to FOMO in on something. They think they're going to make $1 million overnight. Yet what's going to end up happening is all these people that FOMO in are going to lose more money. So stop asking about Terra. Stop asking about Celsius. Stop asking about Voyager because these tokens are only going to be dumped. So they're not good investments. Not good investments. All right. We got 7 minutes. 7 minutes to go. What effect do you think that Mt. Gox will have on Bitcoin in December? I don't know. I don't think it's going to have the same effect as before. I think some people are really fearful about it, but the number of holders has gone up tremendously versus prior years. And they're not dumping on the spot market. Previously, that person, I forgot the name you give him, but he dumped like tens of thousands of Bitcoin on the spot market. He didn't even do it OTC. He just did it on Coinbase. So it was quite stupid. And he did it at a time when Bitcoin is very, very, very weak, around 10,000, and it dropped Bitcoin from 10,000 down to $3,000. So obviously, different time right now. Bitcoin is much stronger, much more holders. And they're giving it back to the people. They're not dumping it onto the market. And a lot of people, I'm pretty sure they've been following Bitcoin. And why would they want to sell it at now, right? At low prices, especially with what's going on. So there's no guarantee that a majority of them will be dumping. Some may be because they've been waiting for so long, but others won't. You got to realize that these guys that are getting their Bitcoin back are not getting the same number of Bitcoins they had. They're getting a dollar equivalent. So if these guys had 1,000 Bitcoins, and at that point it was worth $10,000, right? They're getting back half Bitcoin now. They're not getting back 1,000 Bitcoins. If they did, yeah, then more likely these guys will be dumping, right? But if you're getting a half Bitcoin, you're getting $10,000 worth of Bitcoin. It's different than if you're getting 1,000 Bitcoins back, which was the scenario back then, right? When Bitcoin was like $10-ish. So I think it'll be a non-issue, basically. Ranted long enough, I think it'll be a non-issue. Maybe a little bit volatile due to it, but it won't be the same as before. But we'll see. We'll see. Any update on Flex and AMP? Well, they lost a lot of momentum because basically SEC declared that AMP is a security, and Binance.us basically dumped them, delisted them, and then that that brought them down a lot. That's the latest. I haven't heard anything else. I would be more concerned about ETH liquidations. They're getting a little out of hand. Let's see. Let's check out liquidations from this morning. Well, since you mentioned ETH, last 4 hours, let's just do last hour. Well, you had about 12 million longs liquidated, and then you had about 15, 16 million of shorts. That's within the last hour. That's not bad. That's not too bad. Bitcoin, you could see you had 5 million liquidated when we had that drop down in 21, and then 4, and yeah, so that's 7 million. Yeah, so you're right. There's more ETH liquidations right now than BTC. But if you're looking at everything together, you had about 26 million longs liquidated and about 20 and 32, 33 million. We need to see a lot more shorts. We need to see a lot more shorts liquidated. All right, do we start yet? We need to. I have 2 of these pages up right now. Neither one has started yet. Oh, I think it's about to start. Orphan, thank you. Come on. Have I ever been to England? No. No, it is a destination I want to go, though. I have never been to England. I've been to some of the other European countries, but it was like 20 years ago. It was a long time ago.
Session of the 2022 Jackson Hole Economic Symposium. Chair Powell, the floor is yours. Please come to the podium.
Thank you, Peter, and good morning, everyone. Esther, thank you very much for the opportunity to speak here today. At past Jackson Hole conferences, I have discussed broad topics, such as the ever-changing structure of the economy and the challenges of conducting monetary policy under high uncertainty. Today, my remarks will be shorter, my focus narrower, and my message more direct. The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses, and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, Inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay, as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
That was it. That was it. I'm trying to digest what he just said there. Not really a whole lot. I mean, he gave like a brief history, the three things that the Fed, is I guess created to do, what the central banks created to do, and kind of gave a history lesson. But ultimately, what he said was they care about price stability. Labor force is still strong. There's still way too much demand for jobs. And they will continue to tighten and continue to bring demand down until we get and achieve a 2% inflation rate. Oops. Yeah. So, nothing new, right? Nothing new. You could see. Let's look at a price action here. So we saw Bitcoin dump a little bit down to 21.3. Now it's back up to 21.7. I think that's what's happening right now, guys. 21.8. Like I said yesterday, if nothing new is said, it should be interpreted as a good thing. People are just afraid of what he may say. Basically, he said he's going to be the same, right? Continue to be the same, and they will try to bring inflation down. There may be another 75 basis point hike coming in September. 1 month's reading, including today's PCE and CPI number, showing that things are going down does not mean that things are fixed, right? They're still going to watch that. I mean, I don't think he said anything that was, unexpected or new. Oh, wow, I didn't even notice Dow was down 200 points at one point. Now it recovered up 200 points really, really quickly. It's funny how people, pre-sold before the meeting. And now I think things are coming back. But we'll see. It's still early. Maybe the market still turn, right? But overall, nothing new was said. things that I took out of it, price stability, number one, which means we got to bring inflation down to 2%. Probably not going to happen for years, right? Considering that we are at 8.5% for CPI. To get it back down to 2, that's going to take some time. So there will be more rate hikes. Probably not going to be front-loaded in September, so we're probably still going to see a 75 basis point hike. Labor force is still strong. Unemployment is still low. Consumer demand started coming down. We saw that this morning, but still growing. So, yeah. Yeah, nothing new. Nothing new, really. I don't know if you guys want to do more Q&A or we just call it a day here. Tiberius, I see what you're saying, but cool. Calm down, man. Calm down. All right. Anything else going on? Get your tequila out. It's Friday. A little too early for that. Jeff Hammer, thank you. Always appreciate it. Powell left us tired. Call it a day. All right, guys. I'll let you go. Been streaming a little bit longer today, but I summed up what Jerome Powell just said. Really nothing new, I don't think. We gave a little bit more of a history lesson. But other than that, nothing unexpected. So that's good. That's good, right? Inflation is still high, but the economy is still strong, and we will see what happens. We'll see what happens. This morning we had a little bit of volatility. Let's see where we end up today. It is Friday, right? Heading into this weekend, are we going to see some good movement for Bitcoin? Right now, seems like it's undecided. This morning we had a little dip here, a little rally, then a dip, a rally, a dip. Right now, traders don't know what to do, but I know what to do. I'm going to continue holding, and I'm going to continue DCAing, because that's the true path to wealth when it comes to Bitcoin and crypto. DCA, focus on the future, and hodl. All right? Have a good one, guys. Make sure you go to CryptosRUs.com for all your latest news, article, and guides. Don't miss out, and I'll have a lot more videos for you guys on my other channel, so make sure you check them out. All the links are in the description, and if nothing else, I will see you guys tomorrow bright and early, 11:30 a.m. Central Standard Time. All right? Have a good one, guys. Take care. Bye-bye.
What do you think about Ripple?
Well, I mean, I think it's too centralized, but I definitely want to meet Chris Larson.